Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome everyone here today. The question was, would I wear the green shirt? I wore it on Friday, and this is as close as I could get to the green shirt. We try to kind of wear that green shirt, just as a little fun there. If maybe the market is bullish, and it's great to actually have you kind of say some jokes in the chat. So good times. Now, by the way, if this is your first time here, we welcome you. We welcome you to a great bunch of traders and investors in the chat. So get to know each other. JD99, hello. Dean, David, Bill, Dom, Will, Robert, and many others. Welcome to all. We also have Connie Hill in the chat. And so if you have questions, and I know you do, go ahead and ask those questions. You'll see a response coming back from us with the initials of CH, Connie Hill, and she is a fellow instructor, so she can help you out. Now, many of you, this might be your first class here. This is not a one-off, okay? We meet every week, and these are live and recorded, so you can join a group, okay, and join our classes and other classes that I will show you. Now, just real quick as we get started, some quick housekeeping items. Remember that the information here is provided for informational purposes only, should not be considered an individualized recommendation. Also, when we talk about stocks, which we will, and we will talk about options, so if you have an interest to learn both, well, welcome. Let's teach you. And also remember that when we talk about examples, they are just that. We will use the Paper Money software application known as the desktop. And also remember, remember that investing involves risk, including loss of principal. Now, today in this class, when I look at the markets on Sunday afternoon, Monday early in the morning, I kind of look at the market. I always try to kind of get a gauge of maybe what's kind of a major theme. When you get done with this class here today, you're going to have one picture in your mind, and it's going to be a mental picture of a diagonal line. One of the most important lessons I learned in the markets is watching the diagonal line of support and resistance. In the current marketplace, there's so many examples of diagonal lines that I want to talk about those, using those as an indicator. You might be thinking, well, how do you do that? Well, you happen to be talking to someone who really pays attention to those. Now, these diagonal lines can be drawn on a daily chart, an intraday chart, could be used for stocks, options, currencies, futures, you name it, okay? Now, I Googled, for example, the question that I had is, what if someone said, what is a technical indicator, okay? And this is a pretty good place to get the answer. Signals produced by price, volume, if we're talking about stock or options, and or open interest. So again, signals produced. Now, signals for what? Could be for buying it, could be for selling it, and so on. And so we want to kind of really study the signal of price, okay, today. And that's going to be our focus. Now, for some of you that says, hey, are there any resources that we could have so that way we could join you next week and the week after that and so on? Sure. If you go to YouTube, okay, this is our page on YouTube. And so if you went to youtube.com, you just typed in Trader Talks Schwab Coaching Webcast, you'll find us. You can just type that right here, right there in that box. So if you went to youtube.com, just typed in Trader Talks Schwab Coaching Webcast, it will get you to this page. If you did not know about that, right here in the dead middle of the page should be where you can subscribe. Subscribe just means you follow the content that's on our classes and also on our page, and it will post to your feed on the home page, okay? It doesn't cost anything, so it's an easy win. Go to YouTube, Trader Talks, Schwab Coaching Webcast, just subscribe. Now, the other thing is, so if now you guys and gals know that you have certain, let's say, shows that you like, whether it's sports or whatever it is, and you follow the show or the channel, and that show or channel has a series of recordings. That's what we have, okay? And what you're going to notice is I just sent to you in the chat a link of prior classes, since these are live and recorded, and these are the previous classes. So last week we talked about reviewing and practicing 10 key setups. Now, the thing I need you to understand here is this is not just educational teaching and no example practice. We practice together in the Paper Money account. So let me kind of show you something. We have, for example, when we go to the Thinkorswim platform, okay, at the very top left, you're going to see PM for paper money. Okay, that's not Pat Mullally. It could be, but it's not. Okay, simulated trading. And so we're going to be using these accounts of the IRA and the margin account to practice what we're learning. And that's how we really do it. It's not just education. It's actually taking the education and then saying, let me practice to see how this works and if it's something we would maybe consider. Now, before we actually hop in and start talking about these diagonal lines, what they are, how to draw them, the importance of it, and examples of past and current examples, I just want to kind of take a quick look at something just real quick. Now, of the 4 indexes, okay, now let me ask you a question, okay? Which one is the strongest so far? Is it the Dow? Is it the S&P 500? Is it the NASDAQ? Is it the Russell? What would you say that's actually performing quite strongly here today? Now, remember, we're a trading group, okay? So we'll get some answers in the chat, some responses. And this is what's nice is you're not in this by yourself. Now, here's the nice deal. If we pulled up, let's say, SPX, is that strong? Well, the SPX, if we pull it up, the S&P 500, you're going to see that did make a brand new high here today. Now, that saying brand new high feels like that's, I don't know how many times it's happened this year. Let's say 47 times. Man, we've heard that before this year. What a gorgeous year it's been. Okay. And hopefully, as we come into Christmas, you can buy Christmas presents for your families, friends, and yourself, which is not a bad idea. Okay. Not a recommendation. Now, if you look at the Russell, is that strong? Well, it's not bad either. Kind of a hammer candle here, inverted hammers last 2 days, trying to make a higher low, not at a brand new high, but not that far off it either. So the Russell 2000 trying to get in there as well. And if you look at the Dow Jones itself, it's okay. It's just not a brand new high. So far of the 3, probably the S&P being the strongest, but the one that we're missing, doink, as Bill would say, is the NASDAQ. Now, 2 weeks ago, I talked about this. It kind of pulled back a little bit, showed a moving average crossover, has taken some time, but all of a sudden, doink, to the upside. Can anyone tell me what stock is leading the pack there? Now, let's go to Market Watch. Let's go to where it says Visualize. Okay, so we went to Market Watch, Visualize, and we're just going to go to the NASDAQ 100. Now, here's the thing I need you to understand. It doesn't matter how high the market goes if you ain't in. You understand that? It doesn't matter how high the market goes if you ain't in, okay? Now, the thing is with that is we want to know, like, in what? Where are you in those areas of relative, feed me. What's that word I'm looking for? Relative what? Relative strength, okay? Now, that's kind of the nice thing about when you come to our classes. We talk about that. Now, areas like Tesla, Meta, Microsoft we'll talk about. But we're seeing a couple of these, AMAT, LRCX, Avgo, AMD, some of these semiconductors, ding, 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 that are getting a little push to the upside. Okay, so pretty strong. Amazon also getting in there as well. So there's kind of a couple things in here that I want to talk about, Google included. Now, TTD, also getting a little push here today of $6 as well. You were probably watching that. And also Mrs. Lulu getting involved, okay? Now, so I just kind of want to show kind of what's happening with the indexes. I want to kind of talk about our first example here. Now, when we look at the markets, we are looking at the Dow Jones Industrial List, the NASDAQ 100 list, and we are also bringing up the Dow, S&P 100, NASDAQ 100, and occasionally the S&P 500. We look at the S&P 500 for cruise line stocks, airline stocks, home building stocks, and casinos, which we will bring out today because there's a couple of them moving in there, okay? Now, what I want to do is just real quick is if you said, James, I would like this chart, can you share that with me? I will, so we can be all on the same page. And let me share this chart with you. By the way, I've seen lots of different charts and like this chart. I'm not going to lie, okay? It's not a recommendation, but it does some things that other charts don't. Now, I don't know how you are, but I like simplification. I don't want a lot of stuff on my chart. I just want something nice and clean and pristine, okay? And I want to kind of talk about how this kind of works, okay? So one of the first charts I bring out, and by the way, you got that chart link in the chat, and what you're now going to notice is you can go up to where it says setup, open shared item, and what you're now going to see is on that open shared item, you can just copy and paste that link in that I sent, preview, and then just import that. That's all it is. And it's going to bring up a little mini chart, okay? So that's really not that bad there at all, okay? That's all you had to do there, okay? Now, the biggest thing of what I want to do is I want to go to just real quick, bring up something. And the chart that I want to show here is I want to bring up, let's go ahead and bring up the BA. Now, this might stun you to bring up something like this. Don't be stunned, okay? Now, Boeing, so what we're talking about here today and what the mental picture in your mind is going to be is diagonal lines. We're going to show a lot of past examples and current examples. Some of them we're just going to kind of go by faster than others. Some we're going to do trades on them. Now, the one thing we want to kind of imagine is I want us to imagine that in our hand, we kind of have like a little marker, and we could kind of go to where there were some recent highs. Go to where there's a recent high, go to where there's a recent high, go to where there's a recent high. And all I'm really doing here is I'm just circling some of these recent highs. Well, what are we trying to do? Well, if I took a ruler, okay, we're just trying to really see in this case, where can I get touches? Okay, so if I go from here to there, to there, to there, and then down, I got an angle. Now these highs, lower high, lower high, lower high, it's a downtrend, right? And then if I look at, let's say over here, right, okay, there, and then maybe go a little bit further, you're going to kind of see that we kind of have a longer term line, and then we have another recent line recently. So why do we care? Well, because remember, a good old boy down in Texas, a good friend of mine, said, James, I don't do anything with investing until I see the price breaking a line. Well, what line are you talking about? The line could be diagonal or horizontal. Now, here's the deal. If we have a downward sloping diagonal line, lower highs. If we get above the diagonal line, what do we have to really call this right here? What do we have to call it? Now, here's the thing. The way I teach, it's like we're playing tennis. I'm going to hit you the ball, and then you hit it back to me, okay? Now, don't be afraid about making mistakes. Be afraid about saying nothing, okay? Now, here's the deal. So if you look at this, on 11/22, when that price surged to the upside, that's not a lower high now. That's a higher high. Now, next, what tends to come after a higher high? Hit me with it. You make a higher high, next. Well, you tend to really make a higher, can I buy a vowel? Yes. Well, you get a higher low. And what you're now going to notice on right here is this right here is really a higher low. Now, the sometimes what happens is people think, well, I think the pullback should be deeper. No, you want the pullback to be deeper, but it doesn't have to be. Okay, you make a higher high, and the very next day it goes up to a high again, and then after the higher high, there's the higher low, and it squirts to the upside again. Now, where did the move start? Well, the move changed, this trend changed when the stock broke the diagonal line. What's the word of the day? What's the word of the week? Diagonal. Okay? So one of the specialties, I want you to say, look, I'm good at this. I want you to be really good at seeing diagonal lines. Now, if the stock breaks the diagonal line, could the investor buy the stock? Well, they could. They can consider it, check the volume. Could they do an option on it? Well, they could if they would consider it, right? So what you're now going to notice is Boeing, after the hellacious time it's actually had, it's kind of now getting up to kind of this critical area, like could it get above 165? Now, in our first trade example, one of the trades that we like to practice quite a bit is doing like a short put vertical. Short put vertical is just selling a put, okay, and then buying a put below. It's not super aggressive. It has a maximum gain and a maximum loss. Now, my goal here today is I'm not going to go into like how to trade verticals. The goal of the day is to talk about indicators, and we're talking about price and diagonal lines. Trade number one that we're going to do here today, we'll do stock and option trades. Don't worry, okay? We're going to go to the December, actually, I'm going to go out to the January. Nah, I'll go, this is a little close, but we're on the trade tab, and then I typed in BA. So not too bad, right? And then now what you're going to notice is calls on the left, puts on the right. Now, what we're going to do is we're going to sell the 155. Now, if you sell the 155, you're really thinking the stock could stay up above that price level. Sell and then vertical, okay? So sell vertical. Now, when you sell the vertical, you're selling the higher strike, selling that one. That's the bullish side of the trade. Want the stock to stay above 155. And then this one that you have below is really the 150 strike. That's the right to sell the shares at 150. So in English, selling a put at 155, that's the obligation to buy from now to expiration. And the 150 is the right to sell. So simpler. You have a right to buy at 155. We have an obligation to buy at 155 and a right to sell at 150. So the difference between there is $5, but you get a $1.66 credit. Now, if you look at the break even on this first trade example, this is your classic short put vertical, okay? This trade is slightly bullish, but it has a maximum gain and a maximum loss given a vertical, and then note the commission. Now, I'm going to tell you right now, one of the reasons why people don't trade the diagonal lines is they're mentally stuck back in the downtrend. Now, let me kind of explain what I mean by this. Yeah, but James, it's been horrible. Yeah, James, it's been horrible. Yeah, I'd never get in this. It's horrible. The stock is this, the stock is that. Look, the bottom of the line, people are probably more likely to change than maybe that person. So how did I get to know these diagonal lines so well? It's an easy answer. I was short many of these stocks, bearish, only to see the stock shoot back to the upside, and I was stuck mentally back in that diagonal channel to the downside. And I said, no, it's still a bad situation. It's still bad, still bad, still bad, still bad, still bad. And I just kept seeing the stock go back to the upside. And I would say things like, well, I can't get out now. The loss is so big, I can't get out now. Now, you probably never experienced that. I have, and it stunk. So one of the learning lessons we take is, if the price breaks diagonal line, it's changing even though we don't think it is. Okay? That's a major point. Now, some of you are like, say, James, I'm really sorry for you. Okay? I appreciate that. A little late, but I'll take it. Okay? So trade number one that we're going to do here today is we're going to do a bullish trade in the paper money account on Boeing, and we're going to send it. Now, let me kind of show you a little faster for examples. Now, what I want to do is I want to kind of just imagine I kind of point this out, okay? Where do you see the highs? So I'm going to kind of practice with you a little bit, okay? So if I gave you this chart and said, James, if I had your marker, I kind of see some highs here, and I kind of see some highs here, and some more highs here. If I were to now take a level or a ruler and draw a diagonal line, I'd probably be drawing like a diagonal line, like, well, number one would be like here, okay? That's one angle. Or another angle, maybe something like this. So the diagonal line of resistance, why resistance? Because it was making lower highs, is really nothing more than lower high levels, multiple of them. And that's what creates the line. Now remember, if the price cannot get above the lower high area of the resistance, bears are still in control. Well, all of a sudden, if you look at this and kind of zoom in on this, all of a sudden, the price starts getting above. Now, I don't know how many of you feel like sometimes, James, I saw the signal, but I'm slower to recognize the change in trend. Just talking to myself here, sorry. So we've all done that. We see something where it breaks out. Ladies and gentlemen, boys and girls, that's a higher high. And then all of a sudden, when it pulls back for 1 day, 2 day, and then green candles, ladies and gentlemen, boys and girls, that is a higher low. Well, I wanted to pull back deeper. I wanted to pull back to where it broke out. No, that's what you would like. But if the market pulls back or the stock pulled back less than 3 days, and then the stock bounces up again, it's making the lower high whether you realize it or not. And the longer it takes you to realize it, well, the less upside you potentially have, period, okay? And the more risk that you're taking typically, okay? So I think the thing is not only knowing the price is the indicator, but then trading what you see. And the point of showing this is the stock crashed to the upside, just crashed. And the investors still wonder, do you think it's reversed? Why didn't the investors see the reversal? Because they can't draw the diagonal line. Remember, what's going to be in your mind at the end of this class? At the end of this class, you're going to have a diagonal line in your mind. When you go to sleep, a diagonal line. When you sleeping, you're going to be thinking about a diagonal line. When you wake up in the morning, diagonal line. Now, if we take a look at Mickey D, you're going to notice the same thing. Mickey D was horrible, okay? Going straight down, lower highs. There's no way that it could go back up. That's not what the chart did. And what you're going to notice is if we look at that, kind of draw that, wasn't as straight up as PG, but went straight up, okay? So if you look at this, what you're going to see is on many of these charts, a lot of them had downtrends, and then all of a sudden just kind of exploded to the upside. Disney was another one. It was going straight down. And then all of a sudden, lo and behold, the diagonal line breaks, and the stock just starts taking off. I don't know how you feel, but some might say, well, James, I'd like about 5 of these a month just putting in my account. We know how you feel. Okay, so these are some past examples. Let's kind of talk about some examples right here and now. And I want to talk about these from maybe more of a shorter term in nature. Okay, now the one I want to bring up here is I'm going to go back to Microsoft for just a moment. Okay, now sometimes when we look at the diagonal lines, sometimes they are shorter term. Now, same thing we did before. I want us to imagine that we kind of said, James, I see a high here. I see a high maybe here. I see another high here and an old high right there. Now, if we were to draw like a diagonal line trying to touch as many of these as we could, we might kind of say, James, this is kind of maybe how I have the angle of the line. Now, remember, the angle of the line comes from lower highs. Do you have to touch all the highs? Answer, no. The goal is to touch as many of the lower highs as possible to get the line of resistance. If the stock starts coming up through the resistance, like we're seeing today, that's a breakout, okay? And that's also a higher high. If you make a higher high, the highest likelihood is to really make a higher low. Now, the one thing I want to kind of point out here is, can you also have diagonal supports? And the answer is, of course. Okay, those diagonal supports really come from higher lows, okay, on the chart. So the resistance is coming from, in this case, lower highs. The support is coming from higher lows. This type of pattern on the right-hand side this is what we really call it, like a pennant pattern or a symmetrical triangle. So trade number 2, we're going to do on a stock trade. We're going to right-click on the price graph. We're going to go down to where it says Buy Custom, and we're going to go down to where it says With Stop, okay? Now, I'm going to do it with a bracket order. Now, the bracket order, if you put a target on this, where might you try to set a target? Well, some investors might say, James, I'm going to try to go back up to this prior high, okay? I'm going to try to go right back up to that prior high right there, okay? And we're right about the 440. We're going to go ahead and put that 440 right here. Now, what I'm going to do is also show us we don't have to do 100 shares. We could, let's say we even did, let's say 25 shares. Example given, okay? Does not have to be 100, okay? And so let's say we try to get in right now on the diagonal break. We have a target at 440, and let's say we said, James, I'm going to set my stop underneath the middle of today's candle, about 426, okay, and a half, less 2%. And that's really going to get us to a stop level of 417.97. Now, you might set yours a little bit different, but that's how we're going to show ours. Now, what we're going to do in this case is we got a GTC order, good till canceled. So entry, target, stop, okay? Now, are we saying that's all it could go up to potentially? Oh, don't know. I mean, we're just putting that as a first target. Now, if the NASDAQ were to go to the upside is there might be some chances that maybe Microsoft starts going up as well. When we look at Microsoft, it's really over the last, let's say, 2 months or so that we've been seeing a pretty bullish move. We're going to establish a stock position. Okay, how do we know it's a stock position? Well, there's no expiration, there's no strike, and it writes down for us 3 times that this is a stock position, and we're doing this in a paper money account. Now, also remember, when we talk about stops, they're saying with stop orders, there's no guarantee that what it fills at will be the price that you stated. It's a trigger to sell. It doesn't know where the fill is going to be. That's a risk, okay? Position size and critical. Gonna note the commission, 0, okay? Send the order. Now, what you're gonna see is that order now picks up. Now, I wanna kind of also show just real quick another couple stocks. When we look at, let's say, Amazon, you're going to notice that same thing where we kind of had. Now, let me kind of just explain on these moving averages how it can help us see also the change in trend, okay? So the moving average that we see now on the chart, this is a 10-period moving average, okay? It's a whole moving average. It's weighted, okay? Weighted to the more recent days. So if you said to me, James, I'm horrible about drawing the diagonal line. Well, one of the reasons why we like this moving average combination is it helps us kind of see the angles and also the change in momentum and trend. That could work on an intraday basis, day basis, weekly basis, monthly basis, quarterly basis. I've seen lots of charts. This is the one we've come to. I have a second chart, but I won't tell you about that here today. Now, when you look at this, if the stock is below the moving average, that red line, bears are still in control. The paper money account does not want to own the position or establish a new position because bears are still in control. The sellers are still dominating the price and pushing it down. So if you said, well, James, I am a neophyte with seeing changes in the trend, well, don't worry. If that line goes from red to green, that is the first sign of trend change. And we'll just label this as day 1. So if that line goes from red to green, there's a really good chance in the shorter term we've broken the diagonal line. Now, number 2, if all of a sudden we get like a moving average crossover, that's just more confirmation. If we also get the 20-period moving average, which is that line right there, the lower moving average, if that line also goes green, that's the 3rd confirmation. So this is what we call earliest. This is what we call the crossover, more confirmation, and or the 20-period moving average also going green, more confirmation of more confirmation. Now, historically, you'll tend to look back and say, I wish I would have got in number 1, but, you know, it's up to you to decide where you want to try to enter. So keep an eye on Amazon. That's also been pretty strong here. Now, I got to go back to one trade that we did last week, and we apologize, okay? We did this trade last week, and it was exactly what we're talking about. This was the line that we talked about from last week. Now, we saw some haters there in the chat last week. We can't believe we're doing the trade. Can't believe we're doing the trade. Look, I've had 25 years of experience. I still don't know a whole lot, but let's say I might know something. Okay, just a nice way to talk myself down. Now, the biggest thing is, hey, moral story, still day 1, right? So the biggest thing is had a lower highs on the way down, right? Lower highs on the way down, lower highs on the way down. Breaks the diagonal line, doink, gaps to the upside, doink, pulls back for 1 day only to see it go back up again. That's a higher low, okay? Runs back again. And then here we come into earnings. Now, what was the trade on this? Well, we had 2 trades. The first trade was done, and then we re-enter the position. What is it? Let's talk about it before we look at a new position. Now, this trade only had, okay, so we're using diagonal lines. This was the trade, the second trade we did of this, using the same idea. And this is what I love about a diagonal line. It doesn't have to be that complicated. Someone last week sent me this chart. It looked like they were plotting all the different shipping lanes in the world and said, I think it's now a good time to get in. And I looked at that chart and I said, man, no wonder my friend was still in paper money. Okay. And look, so moral story is it doesn't have to be complicated. Okay. You can use a basic principle or practice and practice it. But having so many indicators and lines all over the chart, I don't know if that really improves the performance. I don't know if it does. Now, what you're going to see is we're just going to buy this back. Now, why are we buying it back? Well, because we sold the put initially. We sold for 116. We're going to buy it back for 11 cents. Why are we going to buy it back right now? What's the critical nature of this? The reason why we're buying it back is it supposedly has earnings today, and we're going to try to profit take the 90%, and we're going to try to put it in the paper money pocket. Okay? Create closing order, buy it, and we're going to close it down. It's at 12 cents now. Okay? Confirm send, and note the commission. It's 65 cents per contract. Got 2 of them. Okay? Going to send that order. Now, I won't go into the full details on this one, but I think we're going to have a little fun. Last week, we taught a class on callers, and you're going to see that caller position, which acts like a short put vertical and or a long call vertical, that is also sitting here at 269. We wouldn't have to stay in the position if we don't want to. I'm going to let that play out. We'll talk about that more tomorrow. That one and Apple have been a very interesting learning example from last week. Now, what's another one? Okay. Well, I'm going to go back to also one of them that we saw, and I'm going to kind of go back and talk about just real quick, WNN. Okay. Why do you think I'm bringing up WNN? Do you see it now? See it on the chart? Like if I gave you my pencil, okay, and I said, I want you, Nora, to draw the line. Can you see it? Well, let's kind of go basic here, okay, just for a second. If I were to look at some recent highs, just kind of draw some recent highs, okay? Kind of had some recent highs right there, whatever, okay? Now, what do we do from those highs? Well, remember, our goal now is if I took like a trend line, okay, and I said, okay, now the question is, do we draw from left to right, okay, or do we draw from right to left? And the answer is yes. I don't care which way you draw, because I think we're going to get something close anyway. Now, if I looked at this and kind of said, where do we see the line of resistance? Well, those are the 2 angles we have where we're touching the lower highs. Now, remember, this class is on trading with technical indicators. Remember, I looked up the definition of what is a technical indicators. It could be, the indicator could be price itself. Well, if all of a sudden on the right-hand side, we're now starting to break the diagonal line, ladies and gentlemen, boys and girls, that's a higher high. Notice the very next day, somebody saw it because the stock gaps up. Now, if we make a higher high, okay, what comes after the higher high? Tell me. A higher low. And now what you're going to notice is if we make a higher high, we make a higher low above the resistance, we now start to see a change in trend. Now, some of you might kind of be thinking, well, James, I like this pattern that we're seeing on the chart, okay? Now, by the way, when you come to our classes each week, as a group, you'll see that other investors are like yourself, and we'll talk about different type of trading examples, etc. And we can kind of like learn together. That's what we're doing. But here's the thing is we like to also put them in paper money and practice the charts and the strategies together. Okay, now, some might say, James, this kind of looks like maybe an inverse head and shoulders. And if we were going to kind of measure this, if we did, let's say about 95 being resistance, and then we have like $84 being that low, well, that measuring technique might be $11 on top of 95. It's going to put a price target right around 106. Now, let's say some of you said, James, I've never done any options. And I want to just kind of do this as maybe more of a bullish trade, but I want to do this maybe from something that's defined risk and potential reward. Well, let's look at one quick example, okay? So I'm going to go on win. We're going to come back down to where we see, for example, let's even do this as like differently. If you've never traded an option, one of the ways you can learn Let's just practice, let's say, buying a call. Buying a call just gives us the right to sell those shares, the right to buy those shares at the strike price from now to expiration. Now, if we buy, for example, given like the 97 and the stock is at 97, that's called the at the money strike. The example that we're going to do is we're going to go something a little bit less for about $4.20 or $4.10 between the bid and ask. We're going to click on that. That also does have more open interest and volume. You can think of this as like it's the right to buy the shares, but let's say we don't really want to buy the shares. What we really want to have happen is the stock goes up and this gets further and further in the money, and this has really more equity on the option. And so our goal is to buy it for $4.15 and try to sell it for a higher amount. Okay? Now, whenever you buy a call by itself, well, you want the stock to go up quickly to counter the time decay and the implied volatility dropping. So let's show this example. I'm not going to put a target or a stop on it, but the risk on this trade is we could lose all of the premium for this long call. Now, we could also kind of say, well, wonder if it does go up to that, say that 106, how much might it be worth? Well, let's do this briefly. Let's go to one of the columns, option theoreticals and Greeks. Let's go right to where it says Theo price. Okay, that's not that bad. Now, what this really does is if we go to Theo price, we can kind of play what's called the what if game. What if in 2 weeks' time, okay, the stock goes up from $97 and it goes up $9. Okay, so I just want to make sure you're following along. If in 2 weeks, today's December 2nd, we go up to December 16th, 2 weeks, okay? Stock price adjustment. It's up $9 from where we are now. The target was 106. And then what would theoretically the price of the option be? Where they're currently right now $4.15. If the stock in 2 weeks went up $9 in 2 weeks, those calls would be worth about, well, from $4.15 up to about 11. Okay, so that's the goal. It's trying to make that intrinsic value. Okay, now what we're going to do in this case, so by the way, when you look at when, why are we talking about it? It's an example right now of a diagonal breakout. Now you might be thinking to me, such as like, hey, James, I noticed on these charts, a lot of these are moving average crossovers. Could that help me find those diagonal lines or the price breaking the diagonal line? Well, the answer is sure. Okay. So what you're going to notice is we share. And by the way, I want to kind of give the proper credit. We are on the Market Watch tab, and I'm on quotes. A lot of these column headings, some of these are indicators, like week percent, month percent, year-to-date percent, what type of trend it is. This is looking at 25 years of lots of stuff and coming to really a final piece, if you will, of some of the indicators that some investors think are kind of important. Now, the point that I'm getting at is if you notice, hey, James, I noticed a lot of these diagonal breakouts, they tend to really be moving average crossovers. So if you were looking at a list, could you see which stocks were doing that? Yeah, sure. X with a green background, that means it's crossing over today, bullish. X plus 1 means it's crossed over a day ago. X plus 2, you get it, crossed over 2 days ago. Scripts are not guaranteed for accuracy, but that's a good way to kind of have a lot shorter list. Now, I want to show you also where you can grab that. Now, first off, let me share this with you, okay? Now, if I went to this edit, share, let me do this with you so I can get that to you. I just put in the chat the column heading, okay, for that. So if you said, James, I want that script that shows the crossover. That crossover is a fundamental piece of the diagonal lines. I'd agree with you. So if you said, I need that, I gave it to you. It's in the chat. And now what you're going to notice is if you said, I would like those other pieces as well, you're going to notice that if you said, where can I also get those? You're going to see right at the very top of that, my X page, you're going to also see that I share those, any indicators that we've used over 25 years. I just pin them at the top. Now, one person asked me, why don't you sell these? Well, anyway, so, okay, back to the material. So what you're going to notice is it's going to show this whole moving average crossover at 1020. You would just really need what's in blue there. And those, what is in blue, are the scripts for any of the headings. Okay? So if you said, I would like the trend daily, yeah, that's what you want. And what does it do? Okay? Well, there's the script for it. It's right on that X page. All you got to do is reach out and grab it. So you could save yourself 25 years of work just by going to that page. You're welcome. Okay. And by the way, thank you for many of you that contributed, and you know who you are. Proper credit there. Now, I want to also go back to when you think of, let's say, Wynn, who are some other companies that are in the casino space? Well, CZR. Why are we bringing this up? Well, what you're going to notice on this chart is it kind of also has, now remember, at the end of this class, you're going to be thinking about diagonal lines all day long, through the night, when you wake up in the morning. And what you're now going to notice is, if we did the same thing, circle the high, circle the recent high. What is the high? It's a lower high area. So if you're a little confused by that, James, I'm confused by the lower highs, just think of it as when the price went down and then it came back up. Price went down, came back up. Price went down, came back up. Okay? These on the bottom are the lower lows, and these on the top are really the lower highs. What do we see right now on CZR? Well, this right here would be a higher high. We count those days, 1 day down, red candle, second day of down day, and then all of a sudden on here on the right-hand side, guess what we have? We have a higher low, okay? Now, wait. So a lot of people say, I wish I would have gotten in when it broke out. Well, that's why we're having the class on diagonal lines. Now, notice, did it also show that moving average crossover here when it broke out? It did, okay? And it would have shown that, or should have shown that recently. And if you look at this chart, the other thing that you're going to notice on this chart is if we start to have, you see that little dot on the chart? What does that stand for? That stands for close above the high of the low day. That's an indicator. That's an indicator to show that the stock is bouncing to the upside. So if this stock for today gets above, let's say where we were just a couple days ago, we'd see another dot. James, where do we have that also there? Well, if you said, where do I get that? Right on the next page, call hold. There's that script right there. You could just reach out and grab it. Full of good news here today. Okay? Now, what you're going to now notice is we're going to buy this, right-click on the chart, last trade, buy custom. We're going to go down to with OCO bracket. Now, if we do the order like this, is this a stock and option trade? Well, if we're buying or selling on the chart, this is a stock trade. Okay? And remember, what's the goal of the investor? To make money. Okay? To make money, to make income, all of the above. Okay? Now, when I do this, what we're going to do is we're going to set the stop right underneath this $38 threshold. Why? Well, that's kind of like the bounce area. Now, this on stocks lower than $50, I'm going to wrap up here. We're going to put a stop at 3% below that $37 threshold, $38 threshold. And that's going to get us 38 less 3%, 36.86. We're going to put that right there, 36.86. Verify, check. Now, if I were to ask you in the chat, where would you put the target? Well, there's kind of a nice line on here. This is kind of where we had an old channel, and then it broke down. For some investors, they might say, hey, James, I'm thinking the stock might try to go back up to 43. Now, you got to remember something. When the stock, for example, is reversing back to the upside, the lower highs become areas of prior. Those lower highs become what we call potential levels of resistance. Okay? I'll repeat that. The previous lower highs as the stock is coming back up, it becomes potential levels of resistance. Okay. Now I got to wrap this up. We're going to go data GTC, data GTC. Okay. Now, what are some of the takeaways you get today? Well, number one is we focus on, I learned a lot of times if you can just focus on one thing, sometimes that's it better. Today we focus on the diagonal line. Diagonal, say the word diagonal louder so I can hear you. Diagonal. Okay. I want you to practice drawing those diagonal lines on the chart. I don't care if they're diagonal lines of resistance, diagonal lines of support. The second thing I want you to practice is, if you don't have that moving average crossover script on your column heading, get it. If you said, James, I don't have that hold script right on the column heading, get it. Share that X page with you. Connie has one as well. She can share that as well. And what you're going to now notice is you could just put those on your chart so it tries to help you with your timing. Now, I want to kind of say this in closing. This class is not a one-off. We have a coaching page right on Schwab Coaching. And you're going to see that if I send you this, it will show you a webcast link where you can see all of our classes like on a schedule. Okay, different classes, different topics, different skill level. Join us. The other thing to remember is if you said, well, where do I see the prior classes in a playlist? Right there. Bookmark that. And last but not least, remember, where could you, for example, see our page right on YouTube? That's free. All you got to do is subscribe. It's right there. Okay? Sent you that link. And so make sure that you subscribe if you have not done so already. Stay tuned for Michael Fairborn coming up next. Today, you know what we talked about, diagonal lines. And tell me if that was helpful for you here today. I think a lot of times we haven't been talking about that enough. So I want to talk about that price as an indicator of trend change. Now, remember with what we talked about, it was done for example, illustrative purposes only. Thank you, Connie. And stay tuned for Michael Fairborn coming up next. And we'll look forward to seeing you back next week as well. Join us. And with that said, take care. Have a great day. Bye-bye.